The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another beautiful November 19th at the headquarters of Technical Trading and Investing. It is TFNN.com. And we're having a good day out here. It's kind of an interesting day, to say the least. I was looking for a gap down this morning. Didn't quite get it, but we are having a pullback of at least some measure. Let me update this real quick, just to make sure that I'm telling you the latest numbers. Now we're off 4.5 points on the S&P cash, just coming in with 2 billion shares. Of course, this is the last day of rollover for options. Not uncommon to see a little bit of volatility during these days. We're going to get into some of the other things. I have pretty much was all 100% short going into the close yesterday. We added some positions in one sector, and we're going to get into that. They're down, I don't know, anywhere from 10 to 15% today. We were talking about a blow-off top in that sector in the den a little bit. At least I said something about it. Got my customers in the path of least resistance short that sector, and also alerted my readers in the other newsletter that that it was time to post haste get out of that sector. But we'll talk about it in just a minute. So what happened on today? John Galt's supposed to call in today. Hopefully we'll get him in today. Today in 1935, John Welch, otherwise known as the old CEO of General Electric, was born. His mother bore him in Salem, Massachusetts. He was a chemical engineer, and beginning in the 60s as a technician in a plant in Pittsfield, Massachusetts, he became chief executive officer of the General Electric Corporation. He's kind of the poster child for what was known as later as Six Sigma, putting things together, and had a huge influence on the way that corporations were run in the United States. So, what can you say? We bring good things to life, Mr. G.E. himself. General Electric, the General. But probably the most interesting thing today is he got a little birthday present. Right before the election, he was molested. He was lied about. He was savaged because he came out and said the job numbers were phony. Right before the election. Well, we found out that just about all the numbers are probably not any better than the ones that come from China today. And how we found this out is a article in the Post. Maybe it'll get some more traction by tonight. But the gentleman, Buckman, who's the reporter there, has 4 confirmations from other folks. He also has the original documents. Apparently, none of the unemployment numbers are correct or have been for a great deal. The census employee was caught faking. I guess the actual employee was Buckman. He was told to make up the information by higher-ups at the Census Bureau. So it was something we probably all knew was happening. We just didn't know how to put a finger on it. If you can look it up, Census faked 20 election jobs report by John Cradell. That's a Crudele, but not anything. I guess we probably could say I'm shocked. There's gambling in Casablanca, but no, it's probably at least 3 or 4 tenths of the job numbers were totally faked going into the election. But what can you say? People will. My dad used to say it best. He says, "Numbers don't lie. but liars can figure. Or figures don't lie, but liars can figure. And I don't know of anybody that really believed any of these job numbers that we have out there. But apparently it's gone into overdrive over the last year or since the election. But interestingly enough, if anybody deserves an apology on his birthday today, it is, of course, the ex-CEO of General Electric. So just thought I'd bring that up. See, maybe we're going to get, I'll guarantee you we're going to get some congressional investigations about this next spring and all the way through the election. But, you know, what can you say? We talked yesterday, we were talking about a blow-off top in a sector, and I had been warning about it since last week or even weeks before to be very worried about it. We actually had been short X1 and had a huge move down in it, and caught that previously a few weeks ago. The other big movers in that sector, DDD and VoxelJet. We are short in the newsletter, DDD and VoxelJet. It took a couple of times to get the actual right level, and I got stopped out in X1, so I didn't have it, but I think I lost $1 or $1.15 on that one. VoxelJet, I lost $1 on the first time I went after it. Second time, of course, we're short at like $67, and I didn't even put up what the current, hang on a second, what the second numbers are here. Off $7.41 on DDD. X1's off $6.35, and VoxelJet is off $13.63. So, kind of interestingly enough, I bring up Jesse Livermore ad nauseum on the show. His book is probably one of the definitive books, and the first book I would have any trader or potential trader read. So many people I talk to still have never read it in this, and I think that if there was anything that they could do to become a better trader, it would be reading that book. But the reason I bring that whole issue up is a lot of the discussions he has on markets breaking and cracking. Especially reaching blow-off tops. He was known as one of the biggest shorters of all time. But we talked about a blow-off top in that yesterday. If you want to go back and look at all of these, very easy to go back and watch the move. And it's close enough that you can go back and do a 2-day chart. But if you want to see the poster child for blow-off tops in a sector, look at these, at least 3 stocks. There may be more out there. These were the ones I was following intraday yesterday, trying to get into them. But huge moves off the top, nothing new. One of the reasons that I wanted to bring this up is surprises almost always come to the downside when the advanced decline line goes down. I want to give Angie a gold star in the den for posting advanced decline line data yesterday. It's something we should all be watching out there. But advancers and decliners, we've talked about the summation a little bit. Yesterday I did, of course, bring up to all my readers in my newsletter about it. But the summation index over the last couple of days, whether or not you can decide to hang tough when the market moves against you for a few days. One of the reasons I was able to do that was looking at the summation index into yesterday's move. It had been coming down at least in the NASDAQ for at least 10 days without a huge move. A pretty good indication that the secondary stocks that aren't in the major indexes are getting weaker, and that fewer and fewer stocks are holding up the market. That we couldn't really move in the S&P, but we're really pushing the last 30 stocks in the Dow. Another good indication that you're hitting some kind of high out there. Look for stresses, and of course the stresses start in stocks that aren't in the big indexes. And of course, they narrow down and eventually probably all you have left is the Dow. And at that point, if the Dow can move and the S&P can't, you're probably looking at some kind of blow-off top or at least a major retracement following. But if one of the hardest things, especially as a swing trader, is to go to bed overnight when you had stocks move $10-15 on you for a $60 stock. Awful tough to be and have the courage of your convictions. One of the ways to do that is they say, is trust your charts, not your heart. But it's still one of the hardest things to do. What you really have to do, at least the best way I've found, is to remember that the summation index, that surprises come in the direction of the index. And of course, summation has been headed down for a while. I've heard that probably from my friend Tim Ord, who taught me early on about the summation indexes. Unfortunately, you can't be watching them every day, but a lot of times when you're very huge inflection at the market doesn't seem to be working correctly, you can always wait for those and look for the divergence. That is, fewer and fewer stocks making a high, light volume, huge movement, and huge manipulation. Lately, the biggest sport in the whole market seems to be running stocks just before you blow them up. And I guess, I don't know if it's just the nature of high-frequency trading these days, but like I said, the last 2 days, you need to go back in and look at these stocks and watch the intraday trading in them so you know how to have the courage of your conviction when these things are going to blow up in your face. Of course, yesterday we talked a huge amount about bubbles, and of course, after we got off the air, Bitcoin went to from about 690 up to 770. Overnight, it went up as high as $900. It went back down and lost over 40% of its value overnight. Again, we were talking about how the bubbles and the actual bulbs in the trading of the tulips actually got bids up until the day that they didn't. And unfortunately, this is the way they move. The thing's kind of stabilized a little bit more. If you missed our discussion on Friday on Tom O'Brien's show about Bitcoin, what we have here is a market that has a very poor liquidity. That liquidity was taken away when the government seized the website called Silk Road. I think Silk Road 2.0 is coming out. I suspect after that happens, the liquidity will be back, at least some of the liquidity. What is unclear is how many of those Bitcoins are actually in the possession of the U.S. government now, and whether or not the U.S. government can actually ever sell those, or do they have to wait until the court case is over to do so. But what we do know is Silk Road had 80 to 90% of all commerce on Bitcoin. And, of course, now you've got very few Bitcoins out there in a market that has run wild, but not uncommon for a market in a bubble. But why I spent so much time on it yesterday. We'll be back in just a minute.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
The move.
I have to apologize, everybody. I have to apologize for our engineer who molests you on a daily basis. If you listen to the show in the den, you have to go through some of the music he plays before my show. If you listen on Tiger TV, I don't think you hear any of it. Or if you watch this on a replay, other than when he injects it into this show. But we always wonder what causes someone to go out and find the worst music of all time and play it and wallow in it. But I guess there's some questions that just can't be answered. You know, could there be a wonderful sirloin steak or maybe a filet mignon over there on the table, and someone goes over and gets a day-old McDonald's hamburger and just the best thing in the world. You just know that the people probably been dropped on their heads and just have no taste whatsoever. But, I guess, I don't know. Maybe there's a MRI or something you can give. Maybe he's got a tumor pressing on the side of his brain. Hard to tell. But I again apologize for the molestation of our audience by having to listen to poor, bad disco music. And occasionally even Ice Baby, which I suspect that he's going to try to pull out on us before the end of the day. Anyway, what else do we have going on? Oh, I wanted to talk about a blow-off top. Some people are always new to the show or new to trading. If you have questions, you can always email me at path@tfnn.com. I'll be glad to send links to you. One of the links that you may want to check out if you hear terms like blow-off top and don't know what they mean, you certainly can check them out. But if you Google blow off top, one of the first things that's going to pop up is Investopedia, and you can go and check out some of these. But the definition of a blow off top's there. If you look at the chart in any of these 3D companies, though, you're pretty much going to know right off the bat what they are. They are a huge indication of a huge parabolic move and the crash that ensues because it was unsustainable. We all think about how markets move, but a blow-off is the equivalent of an avalanche. Snow just keeps piling up. There's far more weight than the underlying snow can handle. In the case of an avalanche and snow, normally what happens is you'll have a very wet or heavy snow and very light, fluffy snow and maybe a little bit of ice. And, of course, the very heavy snow slides off the ice and starts a huge avalanche that, of course, rolls all the way down the hill, and probably the closest thing that we can look at. These things I've become a good student of and watch for them. And a blow-off top, another great trading pattern. We talked about 3D, or not 3D, we talked about 3 gap plays a few weeks ago on Netflix, where we said the last gap was the one to fire away at being short. This is just another great fast money pattern out here that any trader should be aware of. And again, you need frothy markets for this kind of stuff to work. And not only did we need it for the Netflix move, we needed it for these 3D printer companies. But now the companies can come back, pull back. In fact, I'm thinking we could get moves of more than 50% retracement in price, not just retracement in the moves. But I wouldn't be surprised. A lot of these companies come back down 50 to 70% before we find the next buy point. So just keep an eye on those. Let's see what else we have moving out here. Okay. Somebody in the den says we need a taste transfusion. I wonder if that's possible. If we could actually infuse somebody with some couth and musical stylings. Yeah, just a thought. Anyway, as we keep going on, one of my loves, if anybody's watched and the show long enough, is a love of math and science. If you have any children, if you know a school teacher, I will be glad to send you this link. But if you want to really understand mathematics at a very base level, if you have somebody that's in 2nd, 3rd grade or higher all the way up through high school, if you want them to get math, get an idea of the basics of math, there is a great video that runs about 9 minutes that takes you all the way up through logarithms. And this gal is absolutely amazing. But I've got the link here if you're watching it. You can always email me at path@tfnn.com if you would like it. But every teacher should see this video.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Transfusion, my red corpuscles are in mass confusion. Never, never, never gonna speed again. Pour the crimson in me Jimson. I took a little drink and I'm a feeling right.
We do know that he's Disco. Hey, I take it it's Disco Steve at the engineer chair. Don't know. All I have is this I just have to think that, somebody must go in there and just hit him in the head with a hammer every day to get him working. Well, in the meantime, you can always email me at path@tfnn.com, and someone has.
You've got mail.
Oh, I got mail?
You've got mail, baby.
I got mail, baby. Yeah, I do.
I got mail. Yay! I got mail. Yay!
Well, I got mail, and one of the questions was what's going on with these Tesla fires, and what's going on. Of course, Tesla. Let's get this going here. Hang on just a second. Tesla was up actually a little bit, so we'll work on that. But it is. It's been hitting the lows. Let me get you a current quote for you here just a second. NFLX. Okay. Oh, that's Netflix. Excuse me. I want Tesla. TSLA. No wonder why I'm going nuts here. Tesla's up $4 today. Of course, everybody's been talking about the repeated fires in Tesla. Someone asked me my technical view on Tesla, and by technical, not technical in the charts or stock price, but what's going on with these fires. One of the things that they wanted to do is make sure that Tesla's cars, both the sports car they have and their new S model, performed very well and cornered very well. Well, batteries are extremely heavy. So the idea was that they were going to, in the floor pans, put batteries. That means under every one of those seats, across the bottom, the batteries are riding somewhere between 6 and 8 inches off the roadway. So if you run over somebody else's giant muffler that they dropped in front of you, you run over it, there's a good chance that the batteries will be poked and prodded and hit from below, and that's what's happened in most of the majority of these 3 fires. I think, in fact, all of them. The pan that holds the battery is actually fairly thin. They made it that way because, of course, every pound you put into a electric car means it's going to go that much shorter in distance. So the question is, well, what can you do about these fires? That is one of the downsides to having a battery. Even if you wanted to take all the electrical energy out of a battery, it takes some time. There's no switch where you can just dump it like an airliner coming down and dumping all its fuel in the next 15 seconds. Batteries could take probably 10, 15 minutes of that size to totally discharge. You come along a car that's got a gasoline fire, you shut foam on it, get rid of the air, the fire is going to go out. The electrical energy stored in those batteries, there's no equivalent way of just saying, I don't want that power anymore. That power is in those batteries. That power will come out, and it will normally come out in some big form of probably fire, catching the rest of the car on fire. But shorts are that way. They've been talking about adding more and more fuses in the smaller battery packs. But even then, fuse or no fuse, you put a stake or a metal pole through those batteries, they're going to short circuit. There's going to be a fire, and that's going to be it. If you're going to have electric cars, you're going to have electrical fires. And until we get a better replacement for a battery, which I write about a great deal of in the Tech Insider, probably not much going to happen out there. So anyway, you can always give me a call at 877-927-6648. That's 877-927-6648. Love to have your call. If you're in the den, you can always post the questions that you want to me. And let me get a few things situated. Okay. Let's get this off right here outside. Anyway, Tesla, nice little pop in there. So let's go look at DDD real quick. And, this was the chart that we were looking at yesterday. Pretty much the exact same thing that we want to be watching, which is just how we're sitting on these highs, and they can blow off. But pretty good indication yesterday, just from a candlestick perspective of what you're looking for with a move that just never quits. But certainly yesterday's were big. Anyway, if anybody has a question in the den, they can certainly post it, or give me a call at 877-927-6648, or you can even email me at path@tfnn.com, and we'll try to answer your questions. Got a link to video, and a question about DD. Okay, here's a question. Do you think it's too late to buy puts on DDD? Absolutely. Unfortunately, you had a window very short, and even then, I was looking at buying puts on DDD yesterday. They were wildly expensive. And probably a good indication that nobody believed that the price was going to hold on any of those 3D stocks yesterday afternoon, which is a good indication of whether or not you're going to be correct short too. If you start looking at the prices of the puts, and they're wildly expensive, you're probably going to be right and on the right side. Everybody else, the market makers actually selling those puts and calls, pretty sharp guys, and they know whether or not they're probably going to be on the right side. But it's tough. Another question I have in my email today was whether or not you should have been able to buy puts on something like Tesla. And again, they were wildly expensive. I actually looked at shorting, and I guess the other question in the den was why I didn't short Tesla. Let's go back and look at that real quick. The reason why was at Tesla's high at 190, I had to pay $15 to get short Tesla. TSLA. One of the things that we probably don't talk a great deal about, I think it was at 190, I would have had to go short, and basically it would have had to drop $15 before I was even again. And when you find stocks that are heavily shorted, or the belief that it is going to go down, you can have a market that is way too short, i.e., you couldn't get short if you wanted to. If you ask for shares, you find out you have to pay $15 premium on a $190 stock, and that was the problem. Very tough to pull the trigger on something like that, even though you know you're right. So sometimes in short positions, there just is no right answer. And when we look at Tesla hitting 119.22 yesterday, that's exactly some other stuff that you should be looking at. December puts on Netflix, Data, and First Solar. Well, we'll take a look at that. The question is whether or not you could still buy them. I'll try to do some work on it during the next break, but it is somewhat problematic. And I think now that we're already kind of headed down, I got a little pop in the S&P here lately. In fact, let's go back and look and see what we have. Okay. What do we have? Okay, S&P, and we're off 2 points today, 2.2 billion shares. I would probably wait till tomorrow and look at the options about 10 a.m. in the morning. We're probably going to get just a little bit of push, I suspect, since we didn't gap down today, and that push is going to tell us a great deal about which way this market's going. But I suspect probably at 10 a.m. tomorrow, we're probably going to have a little bit of a bounce. Nobody has decided that they make any money shorting this market, so every time it dips 5 points, they're back in there buying it. I suspect they're going to try to do that again in the morning. I suspect they're going to probably find sellers. So, but I think you're probably going to get a fairly decent bite on most of those, but I would wait until tomorrow morning, probably 10, a little after 10 a.m. Might see a little of that premium start to sneak away. But that would be my belief right now. I'll try to go through those during the break. Anyway, trying to see if we can get some other stocks going on. In fact, we got some that we were looking at. Let's see, tests. Let's see about some of these. Cambridge Display Technology used to be called Panel. I'm watching these fairly closely. This one back in tested the August 14th high, $38.10, 2.1 million shares. That's the August 14th high. You had a nice sign of strength kind of coming up into that. But what we did notice yesterday is that it tested, went above, proved the point. It went up higher than the previous high. It closed back below it, and today we're getting additional confirmation. Those that have read my newsletter and listened to this show know that at the same time, I was highly critical of Cree's model, and Cree went from pretty much a blowout during earnings back down to the previous low. Volume is finally starting to shut down a little bit in Cree, but all these LED companies, again, much like the rest of the huge amount of froth in this market has started to come off. The volume is probably not done. We're probably going to get a bounce out of Cree back up to this gap. That gap is about $62. Certainly we could get that. It's probably not going to happen right off the bat. But this is one I covered and actually did the fundamental view of Cree and why it probably wouldn't work. It actually did test the previous high on the same volume, but the fundamental volume, or the fundamental case for Cree out here didn't have it. But this thing still needs to come down and test $63.80. Why, of course, a panel now called OLED not doing the same thing. But certainly giving us maybe another one of these sector moves that is telling us that that whole sector probably a little bloated, and I believe a better solution is probably coming out from yet another company out here. Let's see what else we've got. 2.5 minutes before the break. Looking at gold, interesting moves in it. Of course, when we look at gold today, up about $2. What you don't, let's go to the GLD here and take a quick look. GLD. What we don't want to see in gold, if you're bullish out here, is that this thing hangs around the 1272 very long. The longer this thing hangs out at these levels, it will probably, especially with the light bounce we had off the 121.73 and the GLD, is a good indication that we don't have a lot of energy up yet. That even though we did test the last previous low on half the volume, within 3 days you want to see a sign of strength. You want a big candle, you want a lot of volume, and when you look in the GLD, you just didn't get it, even the first few days. Now, it's not uncommon when you're going to have a huge move to see a market, especially in a commodity like this, slowly move up day after day after day, a little bit. But that's not what we got. We got a gap. We didn't get a lot of volume. The gap went sideways the second day and then started selling off. A good indication that you're at least going to come back and test the next low. The energy really hasn't dissipated enough to make me think that all the selling is done. And one thing you have out there is that 114.68 low. It has high volume, and you don't have a test for it. And just playing the odds, 80% of those are going to get tested in normally within 6 months. We're going on a year here without a test, and it's headed back down that way. So I would really love to see something like 118, 116 back on the GLD, and an opportunity for those not playing the metal through futures to actually weigh in on what they're planning on doing out here and get their vote. But we talked about proving the point, that is breaking a high or a low and having lighter volume and then coming back into the trading range. And we just haven't had that, and that's one thing you love to know. Terry in the Den's reminding us we've got some minutes coming out from the FOMC meeting tomorrow. I'm just wondering if they can really, truly move the market. I think the market's kind of focused on some other things more than that at the moment, because the Bernanke put continues to be on the market, and there's zero fear. We'll be back in a few minutes, and I'll be sending out that link to people during the break.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And shortly, we've got someone that stalks me on Tuesdays and Thursdays. I see that he's lurking around the corner, peeping around the corner, getting ready for his show to start in just a few moments. And normally we've got the Jaws theme going on here because he's out there stalking us. But I guess we've got no Jaws theme today. Oh. Just super retarded disco music, apparently. Okay. Okay. Jaws, the disco version of Jaws. I don't think he wants the disco version of Jaws as his theme. Can't we just play the regular theme, the orchestral theme from the original movie? Anyway, as I digress, and of course this is the #1 digressing show on the internet. We were talking about Tesla, some of these other stocks. One of the things I brought up with Andy and asked him during his show was what he thought about alternative energy companies. And all these stocks, including some of the other ones, all having a hard time. But when he was talking about how everything affects, or at least commodities affect most everything else, what has to happen with alternative energies if crude starts falling, if coal starts falling, if everything gets down? All these stocks have to get hit, and of course I'm short some of these too. But when we look at a few of these, let's see what we did. TSL. You can go through all of these actually. But these things are just acting horribly out here. What do we got out here? Most of these things, some of these things are off 5-10% today. YGE. And one of the reasons I like listening to a show, because not only can you make some money on commodities, but also you can see how commodities will affect stocks coming on. I can't remember, was it a week ago or 2 weeks ago? We were talking about crude and energy coming down. And one of the things I started looking at right away was those stocks in the alternative energy, and found some ETFs to cover multiple ones of them, and went short on them, and we're in the green and making some money. And of course these things are starting to fall apart almost as bad as the 3D stocks out there. So I always encourage you on Tuesdays and Thursdays, if you have the time, to listen to my brethren, my brother from another mother, Andy Heck, after this show. Let's take one quick look in the last couple of minutes of the show of what we're getting out here for the S&P. And of course, we're off of 3 points. Not a big idea that they're going to continue to push this as long as they can, but the advanced decline line doesn't lie. Why didn't Clapton sing that? Advanced decline doesn't lie. Saying cocaine didn't lie. Cocaine's just a powder. It couldn't lie if it wanted to. 1788 on the S&P cash, 2.333 billion shares on the consolidated tape. Not really giving us a lot of confirmation one way or the other. But I suspect that we are going to continue to see weakness into the end of the year, probably stopping, I don't know, probably about the 15th of December. But I think that there's going to be a lot of these very lofty non-indexed stocks that are going to be very, very low-hanging fruit. And, of course, Trina, we showed that just a minute ago, beat guidance this morning, but it's turned negative. Other solar decliners, YGE, First Solar, FSLR, SOL, JASO, CSUN, JKS, all these stocks. Keep a good eye on these. CSIQ2, SPWR, a lot of tickers to be watching there. Anyway, we'll see you tomorrow. Same bat channel, same bat time. Too bad we ran out of time. We'll have a John Galt on tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.